What's up, YouTube? This is Thomas from Thomas Invest and thank you for watching. Today I want to talk about PepsiCo, ticker symbol PEP. PepsiCo is known for the Pepsi, but they do a whole lot more than that. In this video I will give a short introduction of the portfolio and do a fundamental analysis. In the latest part I will tell you if I think PepsiCo is a buy or not. So make sure to watch until the end to see PepsiCo fair value. If you're new to the channel, make sure to subscribe to get notified when I'm posting a video. I also appreciate a early thumbs up, which helps me within the YouTube algorithm. For now, let's dive into it. So as I said, PepsiCo is known for the Pepsi drink, but they do a whole lot more. Over here we see all the brands that PepsiCo has. There are some big names and everybody knows these brands. In this chart we do see the financial highlights. Food is generating 55% of the revenue. Beverage is generating the other 45%. Another interesting number is geolocation. The US is responsible for 58% of the revenue. So now that we have a clear knowing of what PepsiCo does and how the revenue is generated, it's time to do a fundamental analysis, starting off with the PE ratio. PepsiCo has a PE ratio of 28. I think this is too high for a company like PepsiCo. They don't grow that much in revenue or net income, so I think 20 should be the max. I will show you the revenue and net income in a few moments. For now, the PE ratio is a red X for me. PepsiCo has a profit margin of 10%. This is the minimum I want to see. So although it's a check mark, this is something you have to check time to time to see if it's going below 10%. If it does, it means it could become a red X. The revenue of PepsiCo is quite interesting. Let's take a look at the last 5 years. In this chart, we see that the revenue is up 12% since 2016, so that's not a lot. The average growth rate is at 3% annually. It's a check mark, but not by a lot. But it has to be said that it's at least consistent. The profit growth is also quite interesting. In this chart, you will see the last 5 years. Since 2016, the profit growth is up 22% and an average of 12.5% annually. The interesting thing is that in 2018 they had a huge increase in profit. If you want to buy Pepsico stock, this is something you may want to check. For now, it's a check mark. Next up is shares outstanding. You want this number decreasing every year so you will own more of the company. For example, if the company has 10 shares outstanding and you own 1 share, you own 10% of the company. If the company issues 5 more shares, they have 15 shares outstanding, but you still only have 1 share. Meaning you own 7% of the company. PepsiCo does buy back shares, so the shares outstanding are decreasing. This is something I really like to see. But it has to be said that PepsiCo did buy back more shares in the past, as we can see in this chart. But at this moment it's at least decreasing. Since 2016 it's decreased by 5%, so it's a check mark. With the current ratio you want to check if the company is capable of paying the current liabilities with the current assets. You want this number sitting at 2, while 1.5 is the absolute minimum. PepsiCo has a current ratio of 0.93. This worries me a little bit as they aren't capable to pay off the current liabilities. So, red X for me. The free cash flow is used for pay dividends, do acquisitions and buy back shares. You want this number increasing every year. In this chart you will see the last 5 years of free cash flow. We see that free cash flow is decreasing instead of increasing. Since 2016 it's decreased almost 70% and an average of 3.8 annually. This is a red X for me. The last thing I want to discuss is the price to free cash flow. I use this metric to see if the company is at a fair value at this moment. First of all, we need to have a 5-year average of free cash flow. PepsiCo has a 5-year average of 6.6. We use times 20 as a growth rate. In this case, 6.6 times 20 is 132. Meaning a fair value would mean a 132 million market cap. PepsiCo is currently trading at a 202 million market cap. This means the share price needs to drop around 35% to hit a fair value. The share price is currently at $146. It needs to hit $95 for a fair value. So this is a red X for me. Do I think PepsiCo is overvalued right now? Yes, I do. Do I think it will drop to 95 very soon? No, I don't think so. PepsiCo is a solid company and people like to buy Pepsico stock, also because of the dividends. For me, PepsiCo isn't a buy because of the profit margin isn't that high right now, and the company is overvalued and needs to drop in share price to hit a fair value. I think when it drops around 10 to 25%, you will have a nice buy-in option. I simply don't think it would drop 30% or more very soon with the same fundamentals. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I'll see you in my next video.